What a day. Charlie Munger, he's gone. He died, 99 years old. He almost lived to 100. He was almost there. It's like a month and a half. I think his birthday is January 1st. So he almost made it to 100, but 99 years old. Very long life, very full life. It's almost surreal that he's actually gone. That a part of me, for whatever reason, it's like I've just watched so many videos. I've watched him over so much time. I've learned so much. And he's always been old as long as I can even remember him. So I never knew young Charlie Munger. Like that's not even a concept in my mind. It just always looked like this. The first time I remember having any memories about Charlie Munger was when I was a little kid. My dad would take me into his office. He would show me books like the Peter Lynch book, Beating the Street, and he had his little portfolio of stocks. And I remember him talking about Warren Buffett, the Oracle of Omaha, the greatest investor ever, and his right-hand man, Charlie Munger. And that's where I first have a recollection of his name. It was when I was a little kid. Ever since then, my looking at Charlie and his reputation, what I saw of him was just someone that's always reasonable. He's always down to earth, very plain spoken, someone that says it straight. He doesn't try to, Buffett's a little bit more of like a politician. He uses a lot of euphemisms. He doesn't like to call out people or things, directly. Charlie Munger's a lot more open. He'll say what he wants. But 99 years old, and he's gone. Now, I don't think, everybody has their opinion. I think if there is a God, I think he's made it. I think he's going to be welcome. I think he'll be taken care of. And I think 99, that's a good life. Like, he had an incredibly full life. My grandma on my mom's side made it till 97 and a half. And she seemed like she was in good health, just like Charlie Munger. It seemed like, they seem like they're in good health one moment, but when they go downhill, it happens so fast at that age. When you're 90s year old, if you start going downhill in your health at all at that age, you don't have long. It's just like a couple days, maybe a week, and you're gone. But I think most of the time, people that are upper 90s year old, you've lived so long, and most people I think are pretty content if they've had a good life, if they have minimal regrets. And I think that's the situation with Charlie Munger. I can't imagine him being unfulfilled in his life. He's had a pretty outstanding go. No equal business partner has ever played second fiddle better than Charlie Munger. Warren Buffett's closest friend and concierge for 6 decades, the billionaire vice chairman of Berkshire Hathaway died Tuesday at age 99 in California hospital. News release from Berkshire confirmed his death. In public, especially in front of tens of thousands of attendees of Berkshire annual meeting, Munger deferred to Buffett, letting the company's chairman hog the microphone and the limelight. Munger routinely cracked up the crowd by croaking, "I have nothing to add." That is what he would do. Buffett would go on a subject for like 10 minutes, giving this, this lecture over some financial principle, talking about some concept in such an incredible way. And Charlie Munger would be sitting there eating peanut brittle and drinking his Coca-Cola, and then just go, "I have nothing to add" after that. It's just his personality. He doesn't want to waste your time. If he has something insightful to add, he'll add it in a very short way, but he's not just going to add something to add something. He'll just say, "I have nothing to add." In private, Buffett's often deferred to Munger. In 1971, Munger talked him into buying See's Candy Shop for a price equivalent of 3 times a chocolate store's net worth, a fancy price. This was the impact that Munger had on Buffett. Munger was the quality investor before being a quality investor was cool. Now it's in style. I'm a high quality investor, meaning I seek assets that might be trading at a little bit higher of a multiple, but they have better quality. This was one of their first steps into doing that. Up until this time, Buffett had been buying companies under book value. But Munger said, pay 3 times earnings for See's Candy. And this turned out to be Buffett's favorite buy ever. I mean, he talks about See's Candy more than he does Apple, more than he does Coca-Cola, more than he does any other company. He loves See's Candy, and this company has compounded like crazy. It's returned hundreds of times what they paid for it. Buffett later recalled far higher than he was accustomed to paying for a business. See's would go on to generate some $2 billion in cumulative earnings for Berkshire over the coming decades. Now, he paid around $30 million and it's returned $2 billion. 30 million, 2 billion. You do the math. I don't know what the percentage there is. As Buffett wrote in 2015, this purchase ended my pursuit of cigar butt investments, mediocre companies at bargain prices, and set me into pursuit of splendid businesses selling at reasonable prices. He added, Charlie had been using this course for some years, but I was a slow learner. So Charlie was ahead of his time. He was ahead of Warren Buffett, and he had a major influence on Warren Buffett. I would argue that if Charlie wasn't there to kind of pressure Buffett into doing this and to opening up his view of investing, I think Buffett would have underperformed from that time period if he continued to do the cigar butt style of investing, because it quickly went out of favor as computers took over. Buffett nicknamed Munger No Man for his ferocity in rejecting potential investments, including some that Buffett might otherwise have made. But Munger, who was fascinated by engineering and technology, also pushed the tech-phobic Buffett into big bets on BYD, a Chinese battery and electric vehicle maker, and Iskar, the Israeli machine tool manufacturer. Munger was brilliant. He was a brilliant investor in his own right. He began managing investment partnerships in 1962, from then through 1969. The S&P 500 gained an average of 5.6 annually. Buffett's partnership returned an average of 24.3% annually. Munger did even better, averaging annualized gains of 24%. These guys, they're not just legends in our mind, but they're also just legendary investors. 24%, returning these type of numbers is so difficult. Even good investors aim for numbers of like 15%. But here they are just crushing the market. In 1975, shortly before he joined Berkshire as a vice chairman, Munger shut down his partnership over a 14-year history. His portfolios gained an average of 19.8% annually. The S&P 500 grew only at a rate of 5.2%. Like the last video I just shared, it's impossible to beat the market. Nobody can do it. It's lucky if you do. This wasn't luck. These guys used strategy. They looked at fundamentals. They resisted buying assets that just went up in price. They didn't get caught into, FOMO or anything like that. They just had good investing strategy. Here's some pictures of him of when he was younger. See, to me, even these are a little bit younger. He's a good looking guy. I think he looks like a nice looking guy here. But he still looks old to me. He still looks kind of older here. I don't know anything with younger Charlie Munger. In my mind, he's just always been an older guy. The two men had long invested differently. Buffett, under the influence of Benjamin Graham, would buy almost any business, even if it was near dead, so long as it was cheap. Among such cigar butts was Berkshire Hathaway itself, which had been a dilapidated textile manufacturer when Buffett bought it in 1965. If you know about Berkshire, the actual textile mill, terrible investment. The textile manufacturer was bad. Buffett bought it because he got it for cheap, and it was a constant headache for him, a distraction. It required tons of hand-holding, tons of capital. It was just such a complex, difficult business to run, highly competitive. And then China was just crushing them with textile. So Berkshire, in and of itself, the actual business they bought for cheap, was not worth what they paid for it. Even though they got it for cheap, it was a huge problem for them. As Buffett turned Berkshire into a holding company for insurance and other firms, he kept looking for mediocre businesses at bargain prices. Munger instead focused on great businesses at acceptable prices, reckoning that their ability to produce cash in the future would more than compensate for the premium price up front. Over the years of discussion, Munger persuaded his partner to change. Quote, I've been shaped tremendously by Charlie, Buffett said in 1988. Boy, if I had only listened to Ben Graham, would I ever be a lot poorer? Interesting wording there. Boy, if I had listened only to Ben Graham, would I ever be a lot poorer? That's a quote I have not heard before, but this is the importance of adapting your strategy over generations of time. What Ben Graham taught back in The Intelligent Investor is not nearly as applicable today as it was back then. And that's one of the reasons I do not recommend that book to new investors. On top of that, it's a very long, difficult book to get through. But I think there's better investment books today. In 2015, Buffett wrote that Munger taught him, forget what you know about buying fair businesses at wonderful prices. Instead, buy wonderful businesses at fair prices. Berkshire has been built by Charlie's blueprint. So Munger had a huge influence on how Berkshire, the entire organization, ran, on Buffett, on everyone. He had a huge influence on me as well. The guy is just a legend everywhere. The more you learn about him, the more you want to learn about him. And I'm going to miss him. It's sad seeing him go. Even though he's 99 years old, and I realize that, it's time. He's lived a very full life. He has to be happy about that. But I'm still going to miss him selfishly. I wish he could stick around for another 100 years and I could just continue to hear his insights, hear what he has to say about Costco, hear him talk about how much he hates crypto, hear him just give these one-line zingers in Berkshire Hathaway's meeting. I think Berkshire's next meeting is going to be, we're going to have Buffett, but without Munger there, you're missing half the team. 50% of the team's gone. So it's definitely not going to be the same. And the lieutenants at Berkshire are not going to replace Munger. Not a chance. They're not in the same stratosphere of interesting to listen to and learn from. So yeah, that's basically it. Just wanted to upload a video. I'm not monetizing it. I don't care to make money on this one. Just wanted to share that I'm bummed for us. I feel like we're going to miss out on Charlie Munger of the future. We can still watch all the YouTube videos and all the legend of him, but he's off in a better place, and here we are stuck without him and a bunch of other investors that most of them aren't as good. So I think that this is a loss for us, a real bummer. But that's all for now. See you in the next one.